building a business is all about calculated risk. So you're taking a calculated risk that starting something new won't pull opportunity away from the thing that you already have, won't give a competitor, extra footing to compete more aggressively or advantage themselves against you. And those are all the things that you actually need to swirl around in your strategy as a company and decide. But I think the answer is like as early as you can.
Okay, Jay, thank you so much for coming to Israel.
Thanks for having me.
Dude, I got to start with a little bit of provincial Israeli thank you. I mean, listen, we've been through, pretty much hell and back in the last 12, 15 months, I'd say, from October 7th. And I think us as Israelis and obviously in the tech ecosystem, the fact that you being here and other venture capitalists and investors and founders and so on are coming, it goes a very long way. So very much appreciated that. I know we bonded a few years ago and became friends. A little bit about you, obviously you're a general partner at Bond. You've been at Atlassian from 2012 to 2020. You're the CRO and also president, essentially from pre-IPO to almost $3 billion in revenue. You're one of the earliest SaaS leaders to adopt and implement product-led growth, so PLG strategies in investing. And so essentially, Atlassian was bootstrapped to today. I just checked the stock. It's $72 billion company. So a pretty insane run. I don't know, maybe one of the best ever in tech overall, no?
I think so. Yeah. Like from $10,000 of credit card debt to $72 billion. Yeah, the first time the company raised capital was its IPO.
Yeah. So where was Atlassian when you joined in 2012? When you guys were like
size?
In revenue? Yeah.
About 70 people, and they'd just done 15 million in revenue when I joined.
Wow.
So not ARR because it was perpetual license revenue.
Wow. But so essentially one of the things that you implemented very early on was like the multi-dimensional sales model. And I know you're a big advocate of the product advocates that you do have for the product itself. So I would love to kind of hear from you. What are some of the strategies you guys implemented early on and what worked for you guys?
Well, there's some similarity to, Atlassian is an Australian company. So it's headquartered in Australia. So there's, I think, some similarities to the way, Atlassian thought about kind of its market and its TAM. Australia is a relatively small market. So like if you begin in Silicon Valley, you can sell in and around Silicon Valley and kind of grow really quickly just in that kind of cohort of companies. And in Australia, especially at the time in 2002, they needed to basically be a global company from day one, which I think is comparable to Israeli companies. You begin thinking, I'm going to sell this to everybody, even if I start building it here and maybe even starting to sell it here. So, the business model basically began just thinking, hey, the world is flat. How do we reach, as much of the world as quickly as possible? And at the time in 2002, like before I got there, 2002, 2003, they had begun to sell online. So which was kind of unusual for business software at the time. Now with SaaS,
of course,
you can sign up to an account, swipe a credit card and go for a lot of software products. But it was pretty unusual for Atlassian to distribute on-prem software over the internet, let developers download it, buy it with a credit card. And that was sort of the first dimension of our business model was product-led growth, just like self-service. The second dimension of the business model was assisted selling. So if customers needed extra help and care and bigger enterprises, needed more explanation of the product, we had assisted sales team. That was the product advocates that you mentioned. And then the third dimension of the business model was indirect channel, which we began to build at a really early age where we didn't have any presence in Europe. We didn't have any presence in Japan or, parts of Asia. So we would sell through channel. We'd find value-added resellers who would represent us. They do some consulting or services around the software, but then represent us as selling agents effectively globally.
So how do you, from very early days of the company, how do you start expanding worldwide? That's kind of the early days of internet, pretty much, right? In 2000, 2002. And it's not like today you can kind of do everything from anywhere and Zoom everywhere. And so
selling online makes it easy, right? Like when anybody anywhere can buy your products, in the very beginning, in the earliest days of enterprise software, where you couldn't distribute your software online or there wasn't SaaS. It took a long time to go global. You'd have to start a field office, hire a salesperson in France or the UK or Europe or wherever, represent you, have local pricing, have kind of a whole local sales playbook. And, with the internet in the early 2000s, that was sort of the first wave of kind of flattening the world where you could go global earlier. We're a lot
and there was a lot
faster.
of adaptation into kind of product design and messaging and things of that nature, kind of going from Australia to selling in Europe or United States, or?
I mean, we were English only in the very early days. We were English only and US dollars only. And so one of the added values that our indirect channel provided us was if you wanted to buy in euros, I mean, we translated kind of the website and the product eventually, but we really only transacted in US dollars other than through the channel. So the channel would buy from us in US dollars, but sell to the customer in euros or, whatever currency they needed to sell locally.
Amazing. And so kind of when I did a little bit of research before, and I saw that, obviously the conventional wisdom in Silicon Valley and in Israel, historically and even now, we'll talk a little bit about like a second-time founders and establishing a bigger platform early on. But one of the things that you guys at Atlassian was very early on is kind of building two products at the same time at once, right? So the Jira, and right after was Confluence.
Yeah.
So that's also some sort of unconventional wisdom going on.
Yeah. I mean, at the time that Jira was taking off, we began to build our second product, Confluence, which, most people giving the company advice would have said, don't do that. You've got a winner, put all your energy into the winner, don't distract, or bifurcate your focus. So just, do the one thing. And I think it was like, the lesson that I think the company learned, was one, like when you build your second product, whether you're 10 people or 100 people or 1,000 people, it requires kind of coordinating the people that are in the building to understand, hey, we're going to work on something new. We need to represent it on the website. We need to think about pricing and packaging. We need to train the sales organization. We need marketing people to figure out, like, how do we describe what both these things do if they're interrelated? How do we land with one and expand the other? There's a lot to figure out. And so I think the benefit of beginning to work on a second product early is that we were much younger. And so we figured out all those things like really early on. I think we were probably, 40, 50 people, when we started the second products. But by the time we were 500, 600, 1,000 people, like we actually knew how to do it. We were a multi-product company at the time, that I joined, we had 6 products. Wow. And so, and at the time that I left, we had 20. So it was just part of the culture. It was like when you joined Atlassian, you knew that it was a multi-product company. The company had figured out, like, how do we rationalize pricing? How do we think about land and expand? How do we prioritize? Like, what gets hard about multiple products is you have to prioritize. You have to say, well, if we're going to hire engineers, how many engineers go to this product? How many engineers go to this product? I mean, like that takes coordination and thinking and, and planning. And the longer you wait to do that, the bigger you are, kind of the harder it is to do. However, the earlier that you do that, the more focus you take away from something else that might be working. So like I always say, mileage kind of varies. I wouldn't say to a young company, starting your second product, when you're 2 years old or 3 years old, it depends. Like I think in our particular case, Confluence was like a very important complement to what Jira did. And it filled a need, and it was also a big TAM. So there were like 2 big TAMs that we were attacking.
So what would be, what would be some sort of a rule of thumb? And I don't know, so every company is really, it's more an art than a science. It's hard to take, one of the things that I've found out in venture, I came from basketball, right? So then, I played with the Warriors and I had totally different personas in the locker room. And I felt like Steve was really amazing in the fact that he knew how to communicate to each of the individuals each of them was a superstar, right? So KD and Steph are totally different personas, but both of them are just as important for the success of the company. So if I can kind of make some sort of resemblance to what we do in tech, what would be the rule of thumb? Like how early, but even that, I think it's a complicated question because, each founders are different, right? So a little bit of experience, second time founders, folks that have been there, have done it. So if you could kind of share a little bit, what would be a good time to kind of expand to a multidimensional company?
It's not a satisfying answer, but I think as early as you can. Building a business is all about calculated risk. So you're taking a calculated risk that starting something new won't pull opportunity away from the thing that you already have, won't give a competitor, extra footing to compete more aggressively or advantage themselves against you. And those are all the things that you actually need to swirl around in your strategy as a company and decide. But I think the answer is like as early as you can. Like if you've got an opportunity to expand into adjacency, kind of broaden your market, attack a new market that your existing market gives you leverage into. Like, the longer you wait, there's an opportunity cost that somebody else is actually going to take advantage of that. So I think it's about balancing like all the priorities in the business, what the opportunities are that you could invest in, and kind of taking a calculated risk.
No, I like that. I think, one of the things that we examine new companies, new opportunities, obviously you look at the time in the market, and especially when something like this presents itself is interesting. I think one of the things that are happening in Israel, and we'll touch a little bit more about Israel in a second, is that obviously it's a very much of a, say, cybersecurity, kind of landscape and ecosystem. And there is somewhat of a debate in different circles is that PLG can work ever in cybersecurity? I don't know, ever is a good example, but like, do you think PLG can be a motion in cybersecurity and kind of selling cybersecurity? Because I'll tell you why. Because a lot of times, second-time founders, especially in cyber, they've been through some sort of a journey. They sold, and then they really, now they want to do B2C essentially, and kind of like they don't want to talk to CISOs, and they're tired of the motion, and they want to take a PLG motion. Do you think that's something that CISOs or organizations are going to be open to kind of establish internally?
Well, remember, like PLG there's dimensionality to PLG too. So I think sometimes people kind of bucket PLG as entirely like hands off. Right. Kind of the product sells itself. You sign up for it, you buy it, away you go. And I think there's a notion of try before you buy, or some flavor of product self-service that can feed into any category of software, right? Like if you think about it, like the practitioners, if the practitioners are gated, like you can't actually use the product, you can't try it, can't figure out what it does. There's an argument to do that if you want to control the sales cycle and handhold your customers to a certain point, so you know that they understand exactly what you do and they're ready for kind of, the next phase of the sales cycle. I think if I were going to start a company, I wanted to compete asymmetrically against that approach. I would do some flavor of PLG. So like, I'll give you an example of a company we invested in called TwinGate, which is, has R&D here in Israel. And, they're a security company that's attacking kind of networks, like a combination of like network security and MDM, like device management. And they give it to the practitioner. Like you can right now kind of like sign up for it, download it, get started, kind of understand the landscape of what they're doing and how it compares to other things a lot faster than you could with Zscaler,
right?
As an example. And so I just think it's like your business model is a way that you can find competitive advantage. And if everything, like here's the answer to your question. I think in security, if everything looks like, you can't see my product, you can't try my product, you can't figure out what it costs unless you're a CISO and you go through me. If I'm going to compete against that, and all my competitors do that, like I'm only competing, I guess, on product quality and feature and capability, maybe a little bit on price and sort of in the sales cycle. And so I think it's like, I believe any category
can have some sort of a component,
can have some sort of product-led growth where actually you're leading with products, and it might work differently, because like, again, in product-led growth, like you wouldn't necessarily like product-led growth. And this applies to security. If you're buying one thing for the whole organization, like General Ledger or kind of like a, employee like HR management system, like that's not something that you're going to give to somebody in HR and kind of let them poke around. And you're probably going to talk to the head of HR. You're going to talk to, if your General Ledger for finance is like a CFO finance leadership sale, but there might be parts of that surface area that people in finance or HR can get exposed to.
No, it makes a lot of sense. So if you obviously you've been a leader as a leader of a very large sales organization, what is some of the traits that, because, and it's also kind of a little bit of like some sort of a debate that we were having internally. I would love to kind of pick your brain on and maybe it's a kind of twofold question is that, we talked a little bit with our founders and we looked historically and we saw that a lot of the Israeli companies historically, most of them have failed, not necessarily on the technology side. So it's an open-ended question because I don't know the right answer to it, but I'd love to kind of hear your thoughts of something like that. But essentially that, especially in cybersecurity, B2B software, and so on and so forth, the technology kind of get to maturation and essentially can be able to sell B2B, right? So on the contrary, I think where most Israeli founders fail is kind of on the go-to-market, building sales team and starting selling in the US. So I think we haven't seen one company in the last 10 years that couldn't build the technology that they wanted to build essentially, and they failed mostly on the product and go-to-market. So how early in the life cycle of a company you think, especially an Israeli company, which is 99% of the companies are targeting the US market from day one. So it's pretty much essentially there's no market here in Israel. How early would you start thinking of building your sales organization and bring in maybe like a head of sales, CRO, things of that nature, start being the ICP and funnel and so on and so forth? Because the wisdom historically was the first $1 million of sales is got to be the founder, and the founder had to go in and get it. And it still is probably. But we get a little bit of a different sense now working with second-time founders. It's not necessarily they going out, maybe most of it is still they do, but they also have a little bit of an advantage of being there in the market and knowing customer and so on. So maybe to that question, I'd love to how early of a life in the life of a company would you start thinking of building that organization in the company?
Man, another answer of like as early as you can. I think there's
this is that's my thing, but I get a lot of pushback from a lot of people.
Yeah, but I think like there's different flavors of people that you can help. You can help build like early go-to-market. And so like, I don't know, I don't love the playbook of I've got a product. I think I have product market fit. I haven't sold it that much. I'm going to go find a head of sales that's been a VP of sales somewhere else. Because I think the leader, that's kind of scaled up to some form of leading a sales organization might lack the grit that founder sellers in the earliest days, especially the successful ones, because you're figuring out product market fit, you're figuring out kind of go-to-market fit, you're figuring out a bunch of things that actually like require kind of grit and adaptability and like big ears to understand like what's happening in this particular situation. Because the thing you're trying to figure out is what's repeatable here.
Right.
If I sold to this customer and I was successful, what about this customer and this industry or this particular, the buyer in the customer, the message that I worked on, their problem and pain point? What about that is something that I can take to the next one and the next one, and the next one, and the next one, and the next one. And I think that, I think you can a founder could find kind of a gritty, adaptable, hunter that can pair with them in the earliest days. And like, I think the ideal scenario is like the founder, every founder wants to fire themselves, as the chief salesperson.
Right.
As early as possible. And so like, if you can get the first 1 or 2 or 3 customers, and you've got somebody shadowing you that is kind of learning from you or learning with you, by the 4th or 5th or 6th, maybe they're off, the training wheels are off and they're on their own. And that's sort of like, nobody would argue that that's not the ideal scenario if you've got somebody that scales. And then I think it's about, finding repeatability in the people. Like, what about that person made them work? If I understand the situation of the customer and kind of the ingredients that make kind of product market fit and the sales cycle work, what about the person actually made it work? Were they hungry, kind of gritty, determined, good listener? Like, what are the skill sets? And then I can go find somebody else. And that's different than I'm ready for a leader to pour gas on it and go find 10 or 20 or 30 of those people and then do the things that leaders know how to do, which is like, build the system and the machinery and kind of scale it and all that sort of stuff. There's a whole bunch of things that come later, but in the earliest days, I think it's about grit.
All right. No, it makes a lot of sense. And one of the things that, we talk to a lot of Israeli founders all the time. And, obviously the composition of a team, especially on the first time teams, are mostly friends from the army. They've all been very technical. The leader most of the time was some sort of an officer. The CEO, that is also very technical. And the first 10, 15, 20 employees, you would ask them, how many people on your team? It was like 20. And, okay, where they focused at? And 95% of them, other than him, are mostly on the R&D and product, right? So they're like, okay, so who's helping you with customer introductions and talking to the market and making sure what you're building is good? It's most of the time, the conventional wisdom has always been just me, right? So, but I'm like, okay, so that makes sense. But like, where would you fail? I would fail in the go-to-market and selling customers. And a lot of times there's a lot of, especially for Israeli founders, because we're an Israeli podcast, right? And a lot of times there's a lot of terminology and also some sort of a risk that can be mitigated early on of bringing somebody in the US, but it's very hard to bring some sort of a salesperson in the US where it's your first time around, you haven't met a lot of people and so on. But you can talk to a CISO and the CISO would say, oh, I love the product, but A, B, and C. And you thought it was a great, conversation, but he just told you that there's no chance that he's replacing, whatever Okta in the near future, right?
Yeah.
So one of the things that, we not necessarily just investing in first-time founders, we mostly do second-time founders, but we tell first-time founders, like, guys, I know where you guys are going to fail. You're not going to fail in technology. So you got to be in the US a lot earlier and you got to start, building this customer pipeline, an ICP, and identify who the customers are and taking a CISO to lunch and drink, have a steak and here.
Figure it out. Yeah.
Because that's where you're going to fail.
Yeah.
I haven't seen a company in the last 10 years that failed technologically, in that sense.
Yeah. I think that's right. Yeah, I just think that the earlier that you can get somebody that's figuring that out with you, and I think the profile of that person, where I see a lot of companies stub their toes, is you go out and you get the leader, like I mentioned, and then the founder is a little bit disconnected from what's happening in sales. And then you don't understand what's working.
Right.
And so I think in the earliest days, as you're getting your rhythm and you're understanding what's actually working, that is repeatable. Because that's the name of the game, is like repeatability. That's
Absolutely.
like what you're trying to do in go to market, is you're trying to like land one and then have one turn into two and two turn into four and four turn into eight. And the only way you get that is you're like exactly what you mentioned. I know who my buyer is. I know the ICP. I know the segment of the market that I'm going after. I know what message lands. I know what pain points to talk about. Once you understand those things, you can teach somebody.
Right.
And then once you teach somebody, away they go, they're fishing.
Right. So you would take that more of a founder mode approach, that kind of being still very hands-on in the sales cycle and product and kind of go to market and talking to the ICPs and customers.
And I might find, a younger, scrappier, grittier, sales-oriented, customer-oriented profile person to do that with me. If it were me, that's what I would do. I'd be like, okay, let me find somebody that's sort of got the raw ingredients of kind of like curiosity, customer-oriented, understands the product, can talk about it like I can listen to the things that I would say as a founder. And then we're learning together kind of what works. And I've seen a lot of companies do this where it's like in the first handful of customers, I'm leading, you're following. In the next handful of customers you're leading, I'm watching. Mm-hmm. That's sort of the training wheels kind of notion. Like, and once you've got confidence, this person actually knows what they're doing. I'm confident they can do it.
Right.
You've successfully fired yourself, at least, for the next handful of engagements. And then it's about, how do I find more of that person?
No, it makes a lot of sense. I completely agree. And I think for us, I'm only 2.5, 3 years in venture, and one of the things that I was kind of fortunate coming from the outside is kind of similar to sports. You're like, you want the best investors to prove to you. Obviously, you're not a great investor, but you see and you're able to learn from different strategies that work for different investors. I was fortunate to invest in CyberStarts in a company, and Greylock, and you guys, and Sequoia, and so on and so forth, and Index, and many others. So you start challenging different premises that were like, why is it doing this? Like, why this is working, And one of the things that we're fortunate to invest early on is a lot of times our second-time founders that built sales organization in the past, and they sold the businesses before. And you see that from like you mentioned, from the very early days of the company, they're very focused on sales. They're very focused on having, persona that sometimes even, it's a lot easier for them also to their defense is like, I work with, X for 10 years and we sold the business together, and I know he knows me inside out. So it's a lot easier for me, which is a lot harder for a first-time founder that never sold in America. I don't know the personas. But the conventional wisdom is being put to the test, and the challenge where a lot of times the CEO is not even on the call when, somebody's making an introduction and everything is just working seamlessly to a certain company, right? And then it's like, okay, so if it's working for them and this becomes a potential rocket ship and this can become a generational company, there are things that can be learned and to pass that kind of wisdom to the next generation. But we'd love to kind of get a little bit into Israel. And over the last, 12 months, something very interesting have happened. And I think it's kind of happening in two dimensions. One, more on the macro level, Israel from a tech ecosystem has matured to a level where, You see a lot of the international firms were investing all around the world over the years. China is pretty much shut down from a venture perspective. Europe has somewhat stayed flat to a certain extent. But Israel has become the go-to market to a lot of international firms. And I think on the micro level in Israel, Israel historically was very much in the last, let's call it 10, 15 years ago, more of an R&D market, right? You could buy great talent for $40, $50 million. And that was pretty much the market for the Israeli companies. And essentially then there are a couple of outlier companies, but then a lot of $200, $300, $400 million acquisitions. And suddenly we have a notion, and I think Wiz was maybe, the first of hopefully many to follow. And we see that with some of our companies, which we'll talk a little bit in the future. You're starting to see a lot of second-time founder, a lot more mature, that managed large U.S. organizations that bought their first company and they've seen scale. Now they're coming again. And the execution velocity and the market they're going after from a very early days, you can just tell this potentially can be, generational 10, 20, $30 billion business, right? So from day one, Wiz and our company Upwind, and we'll talk a little bit about Eon in a minute, but you're starting to see those potential big outliers, growing out of Israel. So just in the last 12 months, 40 seed rounds have been led by an international firm, which is a record number. And if we look even for the next, 18 months or so, we're seeing 25 second-time founders coming again to build a company. And the talent density coming from the Army, those 750, 800 kids coming from the 8,200, which everybody talk about, is continuing to grow. And suddenly you have large, organizations in Israel. So the ecosystem is evolving. We'd love to kind of hear from you, if that fits kind of what you guys are thinking, where you guys are landing on Israel.
Yeah. I mean, there's no doubt Israel is an incredibly important innovation economy, technology innovation economy. You didn't mention Monday.
Right. Monday is the first of, yeah.
Yeah. And I think it's, there's, incredibly talent rich and talent dense for technology talent. And then I think, the other forcing function that I'd mentioned this earlier, but, I kind of draw, some similarities a little bit to Australia, which I know from my Atlassian experience. My Atlassian was really the first, predominant technology company out of Australia. And then you've got a whole crop of others that came, and like, it was a spring.
Right.
That once you actually begin to foster talent, actually now, in Australia, fortunately for me, you couldn't find go-to-market talent for technology companies at the time that I joined. So the whole go-to-market operation was started in San Francisco, fortunately. Mm-hmm. Now I think that you would probably start, some notion of a go-to-market organization there, because 20 years later, 15 years later, you've cycled a bunch of talent has kind of grown up and around the problem space. So I think that's true here. So I think what you're describing is a, really good beacon of the future. I think there's going to be a lot more experience. There's going to be a lot more proof points, on top of a really stable foundation of just technical talent in the country. And the other thing that I was going to mention is the advantage that I think Israel has, which was similar to, what I mentioned about Australia, is when you begin to build something, you're thinking about building a global company from day one, the beginning.
Right.
And that's a huge advantage. I think sometimes in Silicon Valley, I mentioned this, but you build something and kind of the ecosystem around you is so ripe, but really small in comparison to the whole world, that you can kind of get a little bit lazy. You can start to just sell to your friends and other companies that were around you. And I see this a lot. You see, companies sell into the, Y Combinator ecosystem, and they grow really quickly because all the young Y Combinator companies basically buy the next thing. And then they kind of stall out because they haven't figured out, how do I hop from that lily pad to the much bigger lily pad of selling into Europe or selling into Asia or selling into Ohio or selling into, Latin America.
Right.
And I think, Israeli companies from the beginning are thinking, man, I'm selling to everybody all at once, which I think is a huge advantage. And again, you have to do the hard things of what we were talking about, figuring out how do I find product market fit? How do I build an organization that can kind of tap into the market, that is outside of, of Israel, but at least you're thinking about that from day one. I think that's a huge advantage.
Yeah. And I think one of the things that the Israeli VCs, which also I think are facing somewhat of a challenge that you mentioned Monday, obviously. But I think and Monday, it might not be the perfect example because Monday went through a lot of ups and downs throughout the process. They built an amazing company and the founders are amazing. And we're so fortunate to have them here in Israel, obviously, with the entire ecosystem. But I think a lot of times now when you see those, really strong founders out of the army or a little bit of experience or, a couple of years out of the army or the second time founders creates a lot of tension around and very competitive kind of atmosphere around those companies, right? So today, I think there's I think the last number I saw was 170 different VCs actively investing in Israel, many of which are Israeli, but also the global tier ones are opening offices here and hiring partners on the ground. Did you have, it doesn't have to necessarily be just in Israel, but like, what is your notion? Would you see some of those? And you think, essentially, we'll get into your thesis of investing a little bit too, but like, what do you like to, obviously you have a very unique operational experience, which you can essentially help every company. But, and so what is kind of the thesis that you like to come in with a company and help them?
Personally, I mean, like my background's in go-to-market. And so, the thing that I look for is I look for, Bond invests at that kind of point of inflection where you've got, really strong early indicators of product market fit and kind of commercial market fit. And there's a bunch of scale in your future that, if you want somebody around the hoop, that's done it before. That's why I became an investor, because I, basically, scaled a couple of companies as an operator over a couple of decades. I didn't want to do that again. I wanted to take all that accumulated scar tissue and experience, and I'd bang my head against a bunch of walls that I wanted to help kind of founders that were scaling companies avoid. So I tend to spike on that, like, go-to-market, scaling go-to-market in particular, and then kind of like company scaling is what I've had the fortune of doing a couple of times.
Oh, that's amazing. I think it's such a value add. And obviously we got to talk a little bit about the elephant in the room. We invested together. It came out publicly, so we can talk a little bit about it, but we're fortunate to invest together at Eon. Yeah. And I think Eon is one of the most exciting companies out of Israel. Obviously we're both biased, so don't take our word for it, but what made you think this can be a generational company?
Man, it's got all the rich raw ingredients. It's got a massive market, just a huge opportunity, I think, to build into. It's got an incredible team that actually has already built in that market. They understand the whole entire landscape of it. They've done it before. So they not only have experience in kind of building and scaling a company, but in particular in that space. Yep. And they've got a chance from a clean sheet of paper to build something kind of modern and new, in a category that I think needs it. And it's like when you've got those two things, are like pretty rich raw ingredients to work from. Right. And then, pretty incredible customer love, like early customer love around what they've built, which is like a really strong early signal where you see customers that kind of line up, stand in line in order to get early access to what they're building. Right. That's a really strong market demand signal where you're like, okay, they're onto something. They've done it the right way.
Of course. And I think we saw that firsthand, that just execution velocity and the experience of bringing the right talent and how much of a talent that, founders are establishing early on comes to that component of that. Obviously, I know you're very big advocate of building a product first company, right? And you don't just want to build a sales company, and you want to build something that is sustainable and you can grow over time. How much does that come into the conclusion? And also maybe to touch on that as well. Obviously, you're in the States. What's the process like? How do you identify those companies? Obviously essentially from Israel. What's the process kind of on your end?
For meeting companies like that? Mm-hmm. Well, I mean, keep your earlobe to the ground and just pay attention to what's coming. What great early stage investors that you are investing in, and meet as many of those companies as we can. And then it's about just triangulating kind of how big is the market that those companies are building into, and then spending a bunch of time with customers in the market, understanding what are you looking for? Like, what would it take to convince you to kind of move off of whatever legacy technology this is going to replace, or is the new problem that this technology is solving acute enough that you're going to actually like take budget that you're spending somewhere else and shift it to this. And it's just about understanding that, and then spending time with founders and kind of like, sizing them up and understanding what makes them tick. And, if this is the first time that they're doing, doing this, like, how well do they understand the problem and how charged are they to attack it? And then it's about, what unique advantages are they building that I think is going to give them more velocity out of the gate, maybe against a bunch of competitors that are trying to get the same prize, all that stuff.
I think definitely makes a lot of sense. And I think one of the things that you see with second time founders is, the execution velocity and the fact that they're building multi-cloud platform 9 months in, talking to a ton of customers, getting a ton of feedback, and essentially building a, potential big platform in a generational company. So, one of the things that we do internally is when we identify, it's definitely much different than seed than a little bit of the time that you guys come in, post product market fit and so on. But obviously the team and the Tom and the market essentially that the company's going after, and obviously the connection between the team and how can they essentially maybe solidify themselves as winners in a category. But we like to build those theses and keep them pretty simple. I think it's mostly comes down that, are we overcomplicating things as investors? Because we do keep it simple. We like the team and Tom. I think if it's the massive Tom and we think there's an opportunity to replace one of those kind of more legacy on-prem companies, and especially on the sense of Eon, if you talk to customers a little bit and they say, listen, we spend 10, 15, 20% of our cloud budget on data backup and storage, and we think this is the best team in the world to go after this market, it makes us go. We not necessarily getting into the ins and outs of the technology and trying to identify why this is going to be unique from a technology. We just think it's the best team in the world. It's a massive time. Let's go for it.
Yeah. Yeah, I think that's right. That's why I mentioned those two first. Yeah. Those two things are the most important.
Yeah. And I think there are also certain things that can help, from a competition standpoint, right? If you essentially identify a big market and there's the right partners around the table, the capital providers around the table, it makes everything a lot harder to go after a company like that. And then you go like, okay, so this is kind of like, potentially be the outlier of the industry and be a generational company. And I think this is one of the things that we see in Israel, that if back in the day, founders would target $10 billion outcomes, now you can conservatively say this can potentially be a $20 billion outcome.
Yeah. We talk a lot about the rubric of better, faster, cheaper. And, if you can be all three of those things, the more of those things, the more of those three things that you can be, like the more you improve your odds at winning whatever you've set out to do as a company. And it's hard to do all three. Like usually, like you have to really focus and pick two. Like in Atlassian's case, Atlassian was arguably better than anything in its category. It was faster, like it built a better, faster product. It was faster in its go-to-market. That was another dimension of where we wanted to be faster. Like our business model was faster than the traditional business models we were competing against. And we were cheaper. And so like, even if you look at Eon, like Eon is I think all three of those, they're going to be better. They're faster. Like they've architected the product where they can cost optimize for customers. So they're going to pass a lot of savings on to their customers. And I think that's like, that is the combo you want, right? Because it's tough. Like a customer is going to say, maybe I'm willing to spend more for something that's better. But man, if you tick off, I'm better than anything in the category and I'm cheaper than anything in the category and I'm faster than anything else that you're going to, evaluate. It's like, it's slam dunk.
Right. So you get all three. Right. And I think also there's a component of trust, especially in a category like this where it's data and storage and so on. And I think if you look at a team that have built a business for sold Cloud Indoor now is $1 billion business within Amazon, scaled, a real enterprise business, create that trust.
Yeah, you got
credibility and trust between the customers and potential customers and the executives that they can trust this company and it's not just an early stage startup. It's definitely interesting. And so what are some of the domains now that are of interest for you? And I know obviously AI in the last, 12.
Yeah. What else is there?
Yeah, I know. Right? Everybody just talk about AI. And then a couple of months ago, maybe we thought everything is going to be AI and AI is going to take over the entire world. But things are still moving. There's still cybersecurity companies coming up. So where do you guys spend most of your time?
Everything's going to have a flavor of AI, like it should. I mean, like, even Eon, will have kind of a dimension of AI just in terms of how you prosecute the data that they're going to back up and keep for you. But we spent a lot of time in some of the more boring categories of enterprise software. Like we just invested in a company called Zip that does has built a next generation procurement platform. And and, you know, really sometimes like, you know, the less sexy kind of parts of AI, if you will, because I think they also have a dimension of AI to it, like everything else does. You know, just they're the biggest markets. Like, you know, everybody's got to spend money and has to manage how they spend. Everybody's got to, you know, everybody's using kind of all three of the clouds in big enterprises, and they need a way to kind of back up that data. So we spend a lot of time and I think some of the sleepier parts of enterprise software.
No, it makes a lot of sense. And you've been active in Israel for, obviously you mentioned Monday, and not necessarily you've been involved with them, but like it seems like you've been following and tracking Israeli companies for a long time.
For sure.
And I know a lot of founders that I talked to a little bit before our podcast today have shared confidentially that they picked your brain around different strategies. And first of all, thank you for that. You know, and, you know, so kind of like, what's your history with Israel? You've been in Vast Data as well, right? It's one of your companies you guys invested in.
Vast. Yeah. We've invested, I think, in a bunch of global companies out of Israel. Vast is an example of that. Twingate's an example of that. You know, Eon's an example of that. Yeah. We're really excited about the market here.
Yeah. So if we kind of look into the future, what's the plan for Bond in relative to just kind of like Israel going forward? Are you guys going to plan to come here more often, or what's the best way to kind of get in touch with you over the years, and usually through founders, or what's the kind of your process on that end?
Yeah, I mean, JAY@bondcap.com is
that's easy.
is easy, but yeah, I mean, we try to come here every year, and you know, we're you know a big fund, you know, with a relatively small team, I think, so we can concentrate and focus. And, you know, we're mostly in San Francisco, but we spend a lot of time everywhere in the world.
So Jay, kind of to finish up, thank you so much for your time. Obviously, we're now co-investors for the first time, and I'm super excited to learn from you. Same. And to work with you and the firm. And I'm sure we'll do a lot more together. So thank you for your time.
All right. Thanks, Omer.